Coming up today, stocks continue to rise. Big money turns bullish again. The latest from Apple, US-China trade talks in London. Inflation week kicks off. Flying taxis and everything else getting you prepped for this week. It's going to be a big one, guys. Let's go. So it was a little bit of a mixed start to this busy trading week. Even though all the indices were higher, actually led by small caps, we can see a bit of mixed breadth looking across the sectors here. And just looking at the daily chart of SPY, we are coiling up. Super low volatility today. We didn't even do a full 3-point range on the SPY. Tiny little spinning doji there on a bit of a wedge pattern here, meaning we could be on the cusp of breaking out, either up or down. We can also see that in the chart in the S&P 500. My oscillator almost getting back to overbought territory, as the market does look to be in grinding mode, now less than 150 points away from all-time highs at 61.48. And we can also see the put-call ratio super low here, meaning people have been piling into call options. Bullish sentiment has come back in a big way. But we did get a little bit of a VIX rise today. Even though stocks were up, volatility went the other way. And a little bit of a divergence. And just looking at the term structure, about a steeper contango that you'll almost see here. We can see that with the VIX 9-day at 15 and 4 reversal signals on the front month versus second month VIX futures, meaning things are pretty much as good as they can get, which could be the perfect recipe for a little bit of a rug pull, maybe a shakeout of the weekends before we resume higher. And I'm sure if we came down and retested that 5,800 level, that would rile the bears up, shake out the weak bulls, and then maybe we can continue this uptrend. Because what you'll often see when markets approach all-time highs, they can quite often consolidate, pause, pull back before then resuming their uptrend. So maybe we could get another red candle like we saw on the 21st of May. Otherwise, this market is still on pretty firm footing here. And stick with me today because I'll show you an up-and-coming stock that a proven hedge fund manager just invested $130 million into. One that I shared with my members yesterday and is breaking out today in a hot new industry. But first, let me just get you updated on this week's calendar, what we've got coming up in the market and could get things moving. No doubt we'll get a few headlines off them. We've just finished Monday and we just got the latest developments from Apple and their Worldwide Developers Conference, which I'm about to share with you soon. I'll also give you an update on the US-China trade talks currently being held in London. Then looking out tomorrow and Tuesday, we're going to get a few earnings. Retail meme favorite GameStop will be in play. Then the big one will be Wednesday, CPI inflation expected to come in at 2.5% year over year. Headline growth 0.2 month over month. Then we're going to hear from Jensen Huang in Paris. We've got a decent treasury auction due out Wednesday. And then earnings we'll be looking at Chewy, pet retailer exposed to tariffs, and of course Oracle, the latest on the AI and cloud. Going into Thursday, we've got PPI inflation data, weekly jobless claims, and then Tesla robotaxi. I'll give you the latest on that, what Trump just said about Elon. So that's going to be an important one Thursday. And then after close, we'll be looking at Adobe earnings. Going into Friday, we'll finish out the week with consumer sentiment, expected to come in at 52. So a few items on the calendar this week. Market will be really paying attention to inflation, then of course Tesla robotaxi on Thursday. But before I get into those charts and a few other things, let's just look at a bit of headlines and data. After being super bearish on stocks a month and a half ago, Wall Street lowering all their year-end targets on the S&P, hedge funds, some of the lowest equity exposures we've ever seen, they're all coming back. Retail had been buying the dip. We had a super big bounce, a nice broadening of market breadth. Volatility's dived, and now Wall Street institutions are chasing this rally, along with CTAs, trend followers. And key Wall Street investment banks, Morgan Stanley and Goldman Sachs, now see a resilient economy supporting stocks. Back to chasing the market again, raising their year-end targets. Morgan Stanley seeing 6,500 on the S&P. As pretty much all this tariff drama has almost become a non-event now. CEOs as well, they'd gotten pretty pessimistic, confidence took a dive. Now their expectations of recessions have sharply declined as well. More than 60% of them thinking we're going to get a recession in April, now less than 30%. And that's coincided with a monster crush in volatility. In fact, it's been the biggest 9-week decline we've ever seen in the VIX. Starting at 45, here we are on a 16 handle. That's a 63% crush. And that typically bodes very well for forward returns, as it shows the market's coming from a state of panic and fear to one of bullishness and optimism. And there's a look at valuations. The consensus forward 12-month PE on the S&P as a whole 22, which is a little rich looking back over the last 10-30 years, now at 76 and 86 percentiles. The cheapest sector is still energy, healthcare, significantly underperformed the market. Corporate insiders buying healthcare stocks. REITs are under-owned as well, but of course out in front, the most richly valued tech stocks, along with discretionary. And for good reason, we are still in the midst of a growth-led bull market. In fact, earnings estimates for the next 12 months on the S&P 500 just hit a brand new all-time high. Corporate earnings are still growing well, being led by the Magnificent Seven in this massive capex cycle that we're in. Just looking at the combined free cash flow, last year the 7 companies did over $400 billion in combined free cash flow. That's almost doubled in a little over 4 years. And what they can do with all that cash is buy back their own shares, decrease the supply that helps to squeeze the price higher. We're also on track for a record amount of annual buybacks this year, over $1 trillion for the first time. And we're seeing key players like OpenAI, which runs ChatGPT, just hit $10 billion in annual reoccurring revenue. That's a serious business now, and got there in record time. GPT is only 2.5 years old. And just speaking of mega cap tech, we just heard the latest from Apple in their developers conference, showing off their latest product upgrades, features, which so far appear to be a little on the underwhelming side, as they pretty much just integrate existing AI technology into their products, a new operating system, and just a few other bits and pieces. Nothing too revolutionary at this stage, and we can see that in the market's reaction. Apple shares down a bit over 1% today, doing a bit softer than the overall market. But looking at Nvidia, still not too far off all-time highs either, as we hear from Jensen Huang in Paris this week. Microsoft just actually hit brand new all-time highs today. We can see that's calling up on really low volatility as well. And we also got news of another new structural tailwind for stock market valuations going forward. The White House announcing a new initiative to give every child born in America a $1,000 brokerage account, in which the president's indicated will likely be invested in an S&P 500 index fund. And this is the post from Robinhood CEO, who was on his way to the White House as part of this initiative. And so I think it's a pretty good move because it does give everybody a slice of the pie, even a small one. It's a start, can help give people a financial education, because that's what most of us lack. Curriculums all around the world don't teach us finances, how to save, invest, tax, insurance, index funds, diversification, etc. And so ideally this helps with wealth inequality, but also it's supportive of stock market valuation. The more people that invest, the more money that's invested, the higher the premium stocks should trade at. But of course, that's more of a long-term thing. Just getting back to the short term and the here and now, the market's really looking at how are these US-China trade talks in London going to go this week. Apparently, off to a pretty good start. The relationship seems to be thawing. Did take a dive just a bit over a month ago, but I think it's both in their interests to work out something. The US seeking a reset, looking to pull China more in line to international standards, which maybe they're willing to do a little bit. We've seen them pull back on their rare earth export controls, not just tariffing them, but actually blocking them. But they look to be willing to walk that back, as that was a sharp move from them, and just showed the world how much leverage they've got with those key materials, which has already set off investment to deleverage from them. And it's interesting because Chinese stocks are still outperforming American stocks year to date. And so they've held up remarkably well throughout all this. Not to mention international stocks in general are still holding up and outperforming American stocks year to date as well, although we've seen a bit of a pause in consolidation these last couple of months. And so it'll be interesting to see what CPI comes in this Wednesday, expected at 2.5% year over year. Last print we got was pretty good, but remember, there's a bit of a lag on these tariffs. Maybe we could see a little bump up, because just looking over the last month in trueflation, we definitely saw a bump up from a low 1.37 to where we are now, 1.9. So that could be tariff related in there. And just looking at interest rate traders, they're still not expecting the Fed to move until at least September. And that's been pushed back a lot over the last month or two, as there was strong pricing for a cut even this month and July as well. And just looking at government bond yields could be firming up somewhat here as well. Be interesting to see how stocks do if the 10-year rips above 460 for the first time in a few months. We're also getting some moves in commodities. Silver still trading firm at decade highs, and even though gold's been consolidating for over a month now after having a stellar Q1 into Q2, we got others like platinum ripping up this last week on volume. Crude's bumped up to levels we haven't seen in a few months. And what really did well today, one of my favorites, uranium, catching a bid there on volume, looking really strong on the chart here. So that could be markets pricing in a bit of inflation, global economic growth, or just getting back to a bit of a everything rally, bar bonds. There's TLT, still on a technical downtrend. We've even got the 200-day MA still sloping downwards, still in the midst of the biggest and longest bond market ever seen in over 250 years of US bonds trading. And there's a visualization of that on the monthly chart of TLT. Going from rock bottom rates to a bit of a normalization into 23. Now the Fed's been somewhat on hold for a little while now, only trimming a little bit last year. And so moving on, just looking at Tesla. It's going to be in play this week, officially launching Robotaxi this Thursday in Austin. They just got their official license in Texas to operate autonomous vehicles. We saw a big spat between the president and Elon last week. However, as I mentioned I think it's both in their interests to make peace. They don't have to be best of friends, but they have to work with each other to try and help the states lead in all these important industries that Tesla's involved in. Electric vehicles, robo-taxis, humanoids, not to mention space exploration as well. So we heard Trump extend the olive branch today, said he's open to speaking with Musk. He's not going to sell his Tesla that he purchased earlier in the year, and said he had a great relationship and wishes him very well, for which Elon Musk replied with a love heart emoji. And this just happened an hour ago. So in other words, hopefully we've seen the worst of it. Doesn't look like the president is going to go after Tesla anymore. I think he doesn't want to. Like I said, they don't have to be best buddies, but he can still get behind the company for the benefit of everybody. And this is probably why the stocks rallied somewhat today. Finding its feet going into the exciting launch this Thursday. So we'll be paying extra attention to this throughout the rest of this week. And just moving on to another stock I wanted to share with you guys. Came up on my radar over the weekend. Hedge fund manager Jason Mudrick, betting on flying taxis. This guy's got a pretty good track record. Known for investing in distressed firms. He's now the largest shareholder in Vertical Aerospace, relatively new electric vertical takeoff and landing stock. And he's been known for playing meme stocks before. Done very well out of them. So whether he's just playing this as part of a speculative bubble, a story stock, or whether he sees substance in it for the long term is yet to be seen. But he has sunk a serious amount of money into it, 130 million. And Vertical's business, kind of similar to that of Airbus or Boeing. They sell their aircraft and then lock customers into lucrative maintenance contracts. So the customer's kind of always locked in. And here's a look at Vertical Aerospace's website. Pioneering electric aviation, making some pretty bold claims, defining the future of all electric flight, and there's quite a few stocks involved in this industry now. It's still pretty tiny at only $500 million market cap. I shared with my MMK members over the weekend. Looks to be jumping onto many traders' radar today. Bit of a bump up there in volume, along with other stocks in the eVTOL industry. JB Aviation breaking out to a multi-month high as well. Bit of a pop-up in Archer Aviation, and a stock I invested in as part of my stock pick service, Blade Air Mobility, also having a good day as well. But really waking up today, Bitcoin cracking 110,000 again, along with Ethereum trading up to its 200-day, and I think some of these crypto-related stocks might be about to catch up as well. Coinbase and a few others, and in fact we took a bullish position in another crypto-related stock options today. But fintech in general has been doing well. Hot Stock Dave, Lemonade breaking out, and Robinhood sold off a bit to start the week off. As a rumor went around on Friday night, they got added to the S&P 500, which was not confirmed, but there was a strong buy the dip. And lastly, the stock I shared with my members yesterday has been one to watch this week on potential sympathy trade on SpaceX possibly losing some White House support, or at least their competitors may come more into focus. ASTS having a really strong day today, and Rocket Lab as well, trading up and breaking out. Not to mention Alphabet Google as well with Waymo. Also related, Uber ticking up a bit, and they're going to be competitors to Tesla's robo-taxi. I'm happy to be invested in all three. I think they can all do really well in this new industry. Otherwise, just wrapping it up, getting back to the market. Like I said, we're really calling up here on realized volatility, getting super low. Are we about to go straight to all-time highs on a big fat green candle breakout as bullish sentiment has well and truly returned? Big money chasing this rally, or are we about to get a little bit of a rug pull? Fat red candle, shake out the weak hand. Come down and retest the 200-day MA before resuming the uptrend. As always, I'm interested to hear your thoughts in the comments below this video. Otherwise, we'll see what tomorrow brings us going into the important day of Wednesday with inflation data due out first thing in the morning. Thanks very much for sticking with Click Capital. I'll see you back here again this time tomorrow. Cheers.